Thursday price action was rather subdued, perhaps somewhat fitting given the Fed's upgraded concerns about a prolonged period of low inflation as expressed by the Fed chair late Tuesday and then again echoed in Wednesday's Fed minutes. This left the currency market consolidating an impressive run of gains against the US dollar, with the euro and pound both stalling just shy of critical short-term resistance levels at 118.80 and 133.40 respectively. 118.80 is the right shoulder of a head and shoulders top formation on life support, while 133.40 is the top of a range that has contained the pound since early October. Breaks above these levels would open the door for retests of the respective 2017 highs in the major pairs. But into the European close on Thursday, it wasn't happening, with offers emerging to defend the US dollar against what would likely trigger another major round of dollar declines. It almost felt like the currency market was intimidated by the fact US traders were out on holiday, not wanting to make any big decisions in their absence. As far as the economic data went on Thursday, Eurozone manufacturing PMIs were a head-turner, hitting a 60 print in November, the highest reading on record for this series, which definitely helped to give the euro a little boost. Meanwhile, the pound wasn't able to do anything with inline GDP readings and offsetting second-tier releases, holding relatively flat on the day. But we remain quite bullish sterling and see setbacks in the cable rate well supported ahead of 127.75, ahead of continued upside into 2018, well beyond 140. The combination of a market recovering from longer-term cyclical lows, a strong performance in 2017, BOE normalization, and a Brexit outcome that, while bumpy, is expected to move in the right direction, all support this view. The Canadian dollar wasn't able to hold on to an early run of mild gains, with the loonie reversing course after Canada retail sales disappointed. With the exception of gains on the week against the buck, on the back of the broad-based US dollar weakness, the Canadian dollar is underperformed against its peers. We believe this sends a bearish message with respect to the loonie's outlook, given the currency's inability to perform better this week in the face of rallying oil prices and some upbeat NAFTA news. We have warned the NAFTA risk could be a bigger deal in 2018, posing serious risk to the Canada economy, and perhaps the relative weakness this week in the Canadian dollar has been quietly reflecting this fact. In the crypto world, Bitcoin has slowed down and continues to be at risk for another sizable pullback after ascending to another record high this week. The monthly RSI on the Bitcoin dollar chart is still showing a violently overbought reading above 90. Away from all things FX, U.S. equities held just off their record highs, gold consolidated Wednesday's gains, and oil extended its run of plus 2-year highs. Looking at Friday's calendar, key standouts come in the form of New Zealand trade data, German IFO readings, and some ECB speak. Of course, any headlines related to bigger picture themes like Brexit and U.S. tax reform will also be monitored. But again, with a good chunk of the U.S. market returning next week, any market moves should be taken with a grain of salt, and any levels broken will need to be confirmed when we get back to the fuller form next week, hopefully a week that produces a pickup in yet another subdued market desperate for a jolt, that market being the market of volatility. For that to happen, investors will need to be a little more fearful of monetary policy normalization that has kicked into gear in 2017, something to keep an eye on. That's all for now.